The world economy has just hit a wall. While most people were watching traditional stock markets, a massive step change occurred in the energy sector this morning. Brent Crude has surged to $114, and natural gas prices have jumped a staggering 24% in a single trading session. This isn't just a temporary spike. It is a fundamental shift in the geography of wealth. The era of denial is over, and the era of demand destruction has begun. Why is this happening now in 2026? The answer lies in the Straits. As we've discussed in our previous videos on the Arctic bypass and Saudi pipelines, the world's maritime choke points are under terminal stress. There is no longer any clarity on whether these straits can remain sustainably open. This uncertainty is creating a stagflationary impulse, a rare and dangerous economic phenomenon where inflation skyrockets while economic growth collapses. But the real story isn't just the price of a barrel of oil. It is the explosion of the Brent-WTI spread. While American oil, WTI, remains somewhat restrained, international Brent is blowing out. This indicates that the crisis is deeply targeted at specific economies, mainly Europe and Asia, who are now facing a brutal wealth destruction. We are seeing the impact bleed into derivative products, from jet fuel for airlines to the fertilizers needed for global food security, and even helium for high-tech manufacturing. This leads us to the institutional dilemma. Central banks, led by Jerome Powell and the Fed, are trapped. Yesterday's Fed meeting confirmed a marginally hawkish stance, meaning they are committed to fighting inflation. But here is the problem. The Fed cannot print more oil. They cannot open a blocked strait with a high interest rate. As long as the conflict in the Middle East continues, central banks are effectively sidelined. Their guidance is being completely overshadowed by the physical reality of energy markets. We are currently witnessing the worst month for global stocks in nearly 5 years. But the bottom may still be far off. Equity markets are only just beginning to price in the true damage from energy and commodity disruptions. This is no longer just about high gas prices at the pump. It is about the total restructuring of global industries that rely on cheap, flowing energy. For the mature observer in 2026, the message is clear. The just-in-time world is being replaced by a just-in-case economy. Wealth is being transferred from consuming nations to those who control the primary resources and the infrastructure to move them. As the Middle East conflict enters a new phase of duration, the duration itself becomes the greatest enemy of stability. The geography of wealth is no longer about who has the most money, but who has the most energy security. The bypasses we've discussed, the Arctic, the pipelines, the digital networks, are now the only lifelines left in a world that is rapidly decoupling. Stay informed, stay ahead.